Hi, good morning. GVS here. Today is 19 February 2026. Just for a timeline reference, I'll be covering this NBFC small case product that I have launched about 3 years ago, and I will present some performance highlights and what is my unique style kind of a thing. Okay, this product was launched about 3 years ago, sometime in March 2023. So that's about 3 years now, close to 3 years. It has given a CAGR return of about 23%. These returns are verifiable on small case platform, and we have also have an auditor. We have engaged an auditor. Actually, Smallcase has given us the facility to hire an auditor, which will be doing an audit of all the small case managers' returns. So that's an additional comfort you will have, and that certificate given by the auditor will also be included in the fact sheet when you download the fact sheets and you subscribe to these portfolios. The short point is these are independently verifiable gross returns reported by us, whereas small case technology platform gets this data in a live fashion from the day end updates from the stock exchanges. Okay, so we don't have any access to this reporting mechanism. Okay, so that is the small note I wanted to present to you. Now this NBFC, as you know, is a thematic small case. It's a part of larger BFSI, banking, financial services and insurance sector, which forms the backbone of Indian economy. Around 30-35% of the profits of listed companies are and market cap weightage also is around 40%, 35. It varies between 35 to 40 kind of thing. So because of the profits weightage, they have a higher weightage in the market cap also, in the indices, so to say. BFSI has a higher weightage in Nifty 50, so to speak. Okay. Now NBFCs are these are like barring Bajaj Finance, which has got a very unique model of disbursing loans online and all through some different mechanism. The general growth in this industry is in 2 digits, and there is a hell lot of a competition. There is no doubt about it. Okay, and now nobody knows if the client for these NBFCs has gone incognito, is invisible. So you have to reach him out through apps and digital. So whoever is digitally savvy is likely to do better, provided they have a long standing. Of course, there are various ways of doing this: retail finance, vehicle finance, and whatnot, corporate lending to corporates and all. So it's a tough business, which is why in general you don't see rapid growth of companies, steady growth, but not a rapid growth. It still gives a double-digit earnings growth and all for several well-managed companies, but it is a market that is filled with competition. Okay, so the expectations of returns, because it's not a while there is a immense need for small and medium enterprises, also the capital needs are very huge. We don't know who will get there first. So there is a kind of it's a competitive landscape. So I must present that to you, which is why the earnings also, they don't look so great, but they're decent. As a part of diversification, one should evaluate seriously to have a product portfolio that includes this also. It's up to you. Okay, but one interesting thing I want to present is in such a highly competitive market also. I was just going through the last 1 year returns of various small case products that I have. The NBFC segment has given me, I have reported rather, a return of in a falling brutal market. It as on date for the last 1 year from now, it has given around 45.33% returns in the last 1 year. Of course, it's partly contributed by the weightages we have in gold. I must submit to you that. Because when we found the stocks to be expensive, we either shifted to liquid funds or we had some portion of the total portfolio itself was parked in gold. So whatever, a combination of factors, has given us to the stage where while the CAGR returns for 3 years is around 22 plus percent, the last 1 year is around 45 plus percent. So there will be periods of underperformance for the stocks, but some unrelated diversification through gold or liquid funds may protect the capital and give you still some reasonable returns. So that is the essence of my rebalance style. My rebalance is not periodic, it's not monthly or quarterly, but I do the rebalance in an opportunistic fashion, shifting from stocks to gold and liquid funds and other such instruments when the stocks become expensive or when the underlying market becomes expensive, and then shift back to stocks when the stocks complete their correction. It's an assessment only. It's not about that day, that price. It's more of a when the stocks come back into value zones, you increase the weights of the stocks, you reduce the weights of say gold or liquid fund. So that is how the rebalance, my style, which is I would say there are several alpha managers do this. That is my style too. I would love to time the stocks or buy them in value zone and sell them when they become expensive. And it's a journey, and it's based on periodic review of their quarterly returns and other related market parameters. So this is the NBFC. Now, as you notice, there are a lot of companies that are going through correction as on date. But luckily, I have given the rebalance note in November, so I was sitting on cash on this model portfolio. So these portfolios are unlikely to fall steeply. And the best part of it is we have cash in hand. We, as in the model portfolio, whatever you invest, if you have invested with us already, you have a lot of cash in hand in liquid funds and little bit in gold. And there is one opportunity we are getting is the stocks are going through correction. Second opportunity we are getting is some of the new stocks which have come through IPO. Some of them are wonderful stocks. They are also going through correction. So it's like multiplication of the opportunity is also in the offing. So at the right time, I'll be adding those stocks or getting back to some of the old stocks by reducing the weights of the liquid funds. So stay calm at all times, control your behavior. Patience is everything in investing matters. Trust your small case manager. Don't bother too much about the underlying stocks unless you do this as a full-time job. You may go wrong, or both of us may not have the same level of understanding of the market opportunity. So for us, betting on a winning horse means betting on a good stock when the stock has an inherent potential. Similarly for you, betting on a winning horse is choosing a good small case manager. You bet on us, and our skills, and help us to generate that alpha. So all we request you is patience. Of course, the entire recommendation that we are giving is discretionary in your hands. But have patience. There will be periods of underperformance. There will be periods of overperformance. In a given year, a given stock may rise throughout the year. A stock may have a momentum for 3 months and then fall flat or go through sideways correction or a steeper correction for 9 months in a year. So it's a mixed bag. It's not uniform for every stock or every small case product also. Particularly thematic small cases have these issues of periods of inactivity and periods of momentum phase. Whereas in a diversified portfolio across sectors and all, managers will have the option to take out one stock which is underperforming and add with any stock from any sector. That flexibility we will not have in thematic small case. But theme also, sometimes there is a very high growth theme. Every stock has an opportunity to buy low and sell high, provided it has a reasonable quality parameter. Similarly, every theme, every portfolio, every product, you can make money. Essentially, the underlying strength you should have is patience in investing matters. Yeah. Thank you so much. I wish you all the very best in your investing journey. I'll see you on the other side. Yeah. Take care.